Hi friends, good evening. Welcome to Elliottkipathshala YouTube channel. Today we are going to learn about the moving averages. So we also learn about what are the trading secrets in it, what are the things we must know about the moving averages. So today I will be sharing the working principles and patterns with moving averages, which I learned from my past 7 years of trading experience. Hope this will be helpful to avoid pitfalls associated with moving averages. Try to extract maximum benefits from this session. Right? We will jump into it. So today we are going to learn the concept of moving averages, what is the math behind it, and then when we are using the moving averages, what problems we face, like what is lag and what is noise, how to avoid it. And we also learn the patterns and the secrets and how to analyze the moving averages and how to take entry, exit and stop loss. Right? I am going to explain in detail. Stay tuned. Right? Yeah, concept of moving averages is being derived as the number of prices within a time period is divided by a number of total periods. Suppose if you take look at this chart, there are two moving averages out there. The first one is the blue one is a 20 moving simple average, and second one is 5 moving simple average. We call it as 5 SMA and 20 SMA. So if you observe the 20 SMA means it takes from current candle to the past 20 candles the prices of it, and which will make average of for the 20 candles, which will plot the graph on the chart. The same will be applicable for whatever the number of periods you apply on it. Right? So hope you understand what is the concept behind the moving average. Right? So what are the problems and what are the challenges we face when we use moving averages? Because many people will think that when moving average is being used, they found there are insights, they found some problems, and they found some of the good things will be come to know. But we will go through in depth. What is the lag and noise in it? So lag is nothing but the moving average will not work to as per the current market price. So it takes some time to analyze and to plot a graph on the chart. Whereas noise is nothing but the moving average plot which will keep on changes its direction from time to time. So if you observe the small period moving averages, that is moving average 9 SMA, which is very volatile and very noisy, right? It keep on going up and down, up and down. And whereas if you see the moving average of 20, which is very constant and it is very less noise, and also but it is having the more lag in it. Okay. So this is what the concept behind the lagging and noise. So is there any benefit? Is there any alternative to avoid the lag and noise? That we will look after it. So now I am going to introduce the Hull moving average. So if you see Hull moving average of the 20 period and simple moving average of 20 period, the Hull moving average is being identified as a red color, and whereas simple moving average is being described as a blue color. This whatever the blue color which has been there, which is very lagging, means it is takes some time. There is no lag, there is no noise, but also a big lag is there. But if you see the Hull moving average, if you see there is a less noise and also less lag, means we no need to go with the high lag or high noise issue or low lag, low noise issue with Hull moving average. Many people have been using this Hull moving average. So when they want to trade in the daily time frames and hourly time frame. Friends, I want to tell one more secret. When you are using the moving average, it works basically in daily time frames or weekly time frames, monthly time frames. It works very well, right? So how to find the market is trending or sideways with respect to the moving average? So if we see the curve which is there by moving average, if it is a flat, if you can see here, if it is a flat, so that you consider as sideways. Whereas in trending market, the curve is 45 degrees inclination, right? There is a slope. It means market isn't trending. So with able to, you can able to find the market by just looking up the curve with the angle, how much the slope is being making, right? Then how to identify whether the curve is making the proper slope or not. That I'm going to share the secret. Give me a moment. You can see it. So this is the range the market is been moving from last maybe 40, 50 candles. So whenever there is a breakout happening here, and you can expect the whatever the candle or the price is being staying at moving average line, right? So if you find the breakout and then if you see the curve in it, right? If you see the curve of moving average, it is keep on trending. Means you can able to find this moving average is going with a sun curve, right? With this you can able to find out whether the market is going up or down or sideways. Now, whereas you can see here, now it's keep on going, right? And it, yeah, I can see here, market is in sideways. So neither trending or not upside, not downside. Okay. Then we'll look after moving averages as support and resistance. Especially moving averages works as support and resistance in the longer period, the two in the daily time frame and weekly time frame. If you observe a chart here, 20 moving average in this chart, so we have been used. Whereas here, the each candle it is taking rest on the moving average, where it is considering as a support. And you can also see here when it is in the sideways and even in the trending also, it is taking the support, right? You can observe here. So with moving average, you can also consider this as a resistance when the market is going downwards. Okay. Then how to find the volatility with a moving average? So here I have drawn the three moving averages. One is moving average 10, moving average 20, and moving average 30. These are the simple moving averages. When market is in not volatile, it is very less volatile. You can see these three lines are very closer. When market is going to be volatile, these lines are keeping abroad, right? That is the reason we can understand that when these three moving average lines are closer, you can consider those as a less volatile. When it is a broader, you can see here, the broader is there, then you can consider as a more volatile. So friends, what I understand from this simple moving averages, I want to explain that you can use these moving averages to find the market is in sideways or trending, first point. And you can also able to identify the trend of this one, and you can also identify the volatility, right? Till now we have seen this one. And what are the secrets and concepts which are lying with the moving averages, we will see in further slides, right? So many people are thinking that so crossover works in moving averages like that they will tell. But I will tell you one secret. Crossover works especially in a trending market, and it most of the time it fails in the sideways market. If you observe in this moving average chart, here I have taken 10 SMA and 20 SMA, where in sideways there are a lot of crossovers are being observed, right? Lot of crossovers. So it means the crossover concept is failed in sideways market. And when you see the market is in trending, this crossover works very excellently, right? You can see here the crossover really works in trending, right? So many people only simply define depending on the crossovers like maybe EMA, SMA, or WMA crossover. But know that when the market is in trending, then only this crossover works. So based on that, you be cautious and then only take the trade. And then we'll see further how to find the momentum with candlesticks on the moving average chart. If you observe, when the market is in downtrend and uptrend, so when a candle or any candlestick is formation happened on this moving average line, and from here I can see there is a downfall is happened from here, again down has happened. Then whenever candle closes above the moving average, from there it has gone up. You observe it? So price close above the moving average, upward momentum start. Price close below moving average, downward movement start. But here one thing I want to share where I have used the 56 moving average here. Means this price momentum you can able to identify when you are using the higher period moving average concept, right? So don't go with the 5 moving average or 10 moving average. It will be a more noise. So this will be useful to understand whether the market is in upward or downward momentum, right? Then how to use this moving average as a dynamic of support and resistance. I can consider as a dynamic support and resistance. So instead of making a moving average line with normally a close price, now I have taken as a high and low of the prices. So I have drawn one moving averages of 20 period with a high and another line with a moving average of 20 period with a lows. So now you can see here this made one band. So in this band the prices been keep on moving. Whenever the broad is the candle is crossed this band and again it is traded further, you can see here how the momentum has come, and you can also see here when the band and how you can see how it is been acting like it is a support and resistance. It is been resistance and again support, support, resistance. You can able to find this dynamic support and resistance with the simple moving averages just by making a small tweak in it. Okay. Then how to take entry and exit and stop loss with moving averages. Many people have been asked during my webinars, so that is the reason I am going to share. Please listen here and don't fast forward your video. Right here, whenever if you find any the first concept, I'm going to explain here. Whenever the stock is being trending out from the breakout, then you give the full concentration that here is been breakout has happened and wait till the candle is been taking the support as a moving average line, and from here again take the entry by keeping this as an entry and this as a stop loss, and the exit will be as per your comfortable. And even if I want to tell the secret behind how to book the stock at profit zone, you can consider whatever the move has been taken from the bottom till the whatever the zone means before the resistance level. So how much momentum it has taken, the same momentum from the bottom to here, you can able to book this one. So by this you can able to find out how much move will able to take by seeing the past historical patterns, right? So it means you can consider this as whatever the movement is happened here, it is going to be happened here again, right? So here we have got an entry. We have got an entry at this candle. and by keeping this as an entry, this as a stop loss, and we are booking the profit here, and again it is taking the support, and again it is closed above the moving average line, and this is my entry, and this keeping as a stop loss, and my target will be the whatever the move has happened in this historical pattern, right? So the stop loss is simple. Whenever the candle is closing below the whatever the candle which is being broke out on the wave, that will be a stop loss. So below of the candle will be a stop loss, and you can keep be in the right by keeping the trailing stop loss. You got it? How to take the entry, stop loss, and exit. The major concept here to understand, you have to see whenever this breakout is happened from the sideways range, then the momentum start. Then even if you are seeing the slope is there and momentum is there, and then it is been retesting, and this moving averages line is considering as a support and resistance, then taking the entry as above the candle high, and then bottom of the candle as a stop loss, and be in the trade and can earn from. Got it? Here's a one more chart, Dr. Reddy's laboratories, 20 SME, and again here is the entry. It has been broke out of this zone, and then this keeping the stop loss, and again exit, and again it is given a re-entry here, again it is breakout, and by keeping this as a stop loss, and this is the entry, and again whatever the momentum has happened here, that will be momentum you can able to book in the second momentum, right? So this will be, you can able to understand how to take the entry, exit, and stop loss with a moving level. Okay guys, so hope this will be helpful for you to understand and to trade with the moving averages. So this is definitely helpful for you. And if you want to learn more strategies, follow my channel Elliottkipathshala in Telegram and YouTube. And we work on Elliott Wave analysis, and it works in any market, in any time frame, and these are most accurate. So I just want to conclude today. I wish you all the best. Stay tuned. If you like this video, do like and share and subscribe to our channel. Thank you. Take care.